Hello, thank you for tuning in to this week's Stock Talk episode. I am Lisa J. Stocks, and today I'm going to be talking about a post that I created recently, and it got a good amount of reactions. And I thought to myself, maybe I could expand this into a live stream and then, build upon it from there to go in depth. Because when I make my posts, I try to keep them short and concise because I think people have TikTok brain. They don't want to read long, long paragraphs and details, but it's different when I turn it into a live stream and can really go into the details as to what I was thinking and give my own personal experience in these different categories. And so I want you guys to make sure to like, subscribe, make sure to chat, ask questions, engage with this live stream. And so this is inspired by a post I did a couple of weeks ago. Actually, I posted this on my birthday in the Discord as well as to my channel members. And the theme of it is, don't just save and invest. Actually know your numbers. If you want to build wealth, you need clarity. And so we're going to go into detail the 8 points that I shared briefly in this written out post. So guys, make sure to drop in the chat. I'm going to now at the beginning, and as we go on, we'll see if your answer changes. But do you think you know most of your numbers, or are you not sure yet? So a money bag, if you know all of your numbers, and and I don't know if you're not quite sure and you think that there might be some things that you need to get more clarity on to truly be on top of what's going on in your finances. And so, Christina, thank you for chatting and tuning in. Let's see, Daryl, background balloon. Thank you, everyone that's tuning in so far. And make sure to hit that like button as you come in. So, most people may not have as big of a money problem as they think. It's about, having clarity and doing the work in order to maximize their money. And so this live today is going to be kind of a deeper dive into having a financial awareness check-in with yourself in order to make sure that there's no guessing, that you're moving with confidence and you are on top of everything that's going on. Okay. I'm seeing a few people saying they know their numbers. I see money bags in the chat. So make sure that you're passing this on to the kids, the grandkids. If we go through all of these points and you're on top of it, let's make sure to bring those around us on the same journey so that they don't have to spend years making mistakes that we've already gotten a handle of. And so let's get started with number one. And that is going to be, what is your APY when it comes to your savings? And I always stress that it's important for us to have savings. I hate hearing that people, I do this. I'll have an order. I have I have my list. I have an order of how I want to do things, but I'm always getting into them before we get there. But let me try to just stay on track. Hey, Key, Canadian, walk by, everyone that's tuning in, please know that I see you. I appreciate you being here. I'm just getting started with my topic, which is save and invest, actually know your numbers, and be intentional. Have clarity when it comes to your money. So, all right, point one, know your APY when it comes to your investments. And right now, obviously, we know the interest rates have been changing. Jerome Powell, makes his decisions, and that's going to adjust our savings. A few years back, we were getting 5%, still getting such a significant amount. But I want you to know, how much do you have? Are you holding too much at perhaps your local bank in your checking account? Are you keeping a minimal amount there and having your money in a cash management account, a high yield savings account? Do you know your numbers? Are all of your savings sitting somewhere that you are truly maximizing the potential of it. And I always stress that I want you to have savings because two reasons that really tie to what I share on my channel is I want your investments to stay invested for your intended purpose and not have to be tapped into for an emergency. I don't want us to run into credit card debt when we have to charge something, especially if it is something substantial. I want us to have cash to get that paid off as quickly as possible so that we're not paying interest to those credit card companies. Okay, so now I have 3 examples of places that I'm currently holding cash and for different reasons. Discover, that's strictly for, savings, business money that I have for potential repairs and things like that. Guys, I hope everyone is safe and warm right now. I know probably if you are in a snowstorm, you will have to go outside in the cold at some point, perhaps to do some maintenance and stuff. But I just wanted to, I am in the midst of, a 1-foot snowstorm myself. I hope that everyone has everything that they need and they are safe. But yes, okay. Discover. Right now, I'm getting 3.3% over on MooMoo. Is one of my investment apps where I primarily have a taxable account. I'm currently getting 3.35%. And then over at Fidelity, the SPAX, SPAXX, is currently at 3.34%. So basically all identical. So I just wanted to bring that to your attention. You may have money somewhere that has even a slightly higher rate at Ally or SoFi or something like that. But do you have your money positioned in the place that you really truly feel is the best place for it? Are you holding too much money, perhaps in a checking account where it could be maximized? Not what we used to have at 5%, but at least the numbers that I said. And so, guys, I'm not ever sharing financial advice as to where you should hold your savings, what you should invest into. I'm sharing my personal journey, my results, and making sure to bring things to your attention so that we can make sure that we're maximizing our money and creating the best financial future for ourselves that we possibly can. Okay, so that is point number 1, that APY. And inflation will just be eating away at our money. So we have to make sure that we know what is going on with our saving. And I already touched on the 2 biggest reasons that I'm always stressing this. Saving, tapping into your investments before the intended time, running into credit card debt. And, especially with things going on today, these huge layoffs, you don't know how much longer it potentially could take you to find your next role. So we need to have that cushion so that we're not creating those issues where we're tapping into our money or, running short and putting ourselves into debt. And so I see a lot of things going on in the chat. So I'm going to take a quick break before we go on to point number 2. I made like $40 interest last year. Like, that API isn't a huge game changer. That API it's not a huge game changer depending on how much you have, but better to take advantage of it than to get better to get $4.04, which is what you would have gotten at the Bank of America. That's the way I look at it. Yeah, some of my interest is not going to be substantial because it's based on how much you have in that account. But I will take it. Yes, guys, what's going on? Key is saying you guys are not hitting the like button. And there's 18 or so of you in here right now. Take a second and do that, please. If you enjoy this content, if you're not subscribed already, make sure you do that also. That is true. Better to make that interest than not make any. Yep. Okay, guys. Okay. You guys, thank you guys for looking out and encouraging everyone to take that second and hit that like button. All right. So now, Okay. So guys, I'm gonna take a quick scroll back to see if there's any question that you really wanted me to ask and I miss it, please ask it again. I'm actively working on raising the amount I save. That's great. That is great. Okay. Let's see. I see Rod's in the chat, so everybody better behave because he will get you up out of here. Okay. Thank you for tuning in, Rod. Hey, David. Great to see you. What are you sharing? American Express, Fidelity Go. Okay. My savings with my checking for a quick transfer if needed. Yep. Okay. All right. So now let's go on to, yes, Fidelity Cash Management is a good choice. I often get that question as to, what is the best? And like I just ran down three different, three different, a regular Discover savings account versus my MooMoo investing app versus Fidelity, a big brokerage, legacy broker. They're all basically the same. So just figure out which one you are comfortable with that is insured, reputable, and in line with what you want. But I gave you three different examples, and they're all basically the same APY right now. So next up is point number 2. Do you know your portfolio performance? And this is a big one. I want you to know big picture since you started this account, year to date, lifetime. What position is doing the best for you? What's lagging? And when I say lagging, if it is lagging, do you really have your head around why it's currently performing that way? And why are you holding on to it? Is it because, it's something, tied to the interest rates, recession, a particular sector that, is going to move in that way? Why are you holding on to it? Does it truly deserve to be in your portfolio? Now, having ETFs are something that can kind of simplify this greatly. And I try to do a large portion of that when it comes to my retirement accounts, because I like those to be more set it and forget it. But whichever type of account it is, whether it's your taxable account or your retirement accounts, what are the winners? Who's outperforming? And is everything performing the way that you expected it to? Do you have a standard of what you want your portfolio, what is your line as to what you want your performance to be? Okay, so now let's move on to the fees. And this can be a big one if you have an account, say, for example, from an employer that you no longer work with. You have a leftover, 401k at this brokerage account. Now that you're not working at that company, that alone could be causing you to incur fees. And if you weren't even that in tune as to what you were invested into while you were working for that company, that could be another obstacle. You could be in an underperforming investment and getting fees because you're no longer working there and you haven't made any moves to transition it into a different IRA. So these are the type of things I love to just keep on highlighting, things that I was losing money to in my own personal life until I really dug through all these different things and made sure that I'm not going to be having nothing is hidden from me. Everything is totally clear as far as whether, it's a trading fee, it's the expense ratio, all of my numbers I'm in tune with. And when I make a decision to incorporate something, I know that I feel if it is something with a more substantial fee associated with it, that the performance, the reward, the benefit is there. And I weighed that in making my decision. For example, SPMO has a higher expense ratio than some of my other investments at just 0.13%, but that performance was something that I factored and made it an easier decision for me to incorporate that as an investment that I plan on holding for the long term. So high fees aren't always bad as long as you know that it's worth it and in line with your goals. And so let's see. Have you checked on the expense ratio of the different funds that you are invested into, what your employer retirement account options are? Is this a number that everyone has total clarity on? Now, number 3, do you know where all of your 401ks are? Which ties into what I was just talking about. Nowadays, something I definitely want to continue to highlight because we're changing jobs, whether it's, for me, it's not by choice, but, I've been laid off a few times now. And so with that, that causes this transition of having to start over and over again with a new retirement account. And so this is something that I think that it's different than our grandparents, great aunts. Their history was mostly a much longer stint at the same company, 20, 30 years working at the same place. Whereas many of us are changing jobs, like I said, whether you want to or you choose to, in 4 or 5 years. So that was number 3 on my list, I think. What did I say? Oh, no, that was number 4. Do you know where all of your 401ks are? And let me take a break before we go on to point number 5. Okay. East Boogie, thank you for tuning in. Let's see. Great info and questions. Okay, you have questions. Make sure you guys drop your questions. Okay, I see Key has a question. The S&P 500 index is mostly for tech companies. Is still diverse enough? Well, as far as diverse, I have a significant amount into FXAIX. That's one of my basic foundational investments. Now, because it's weighted by market cap and, Tesla, Microsoft, of course, NVDA, Apple, those companies have the largest market cap. So that's just naturally going to cause it to be tech heavy. Amazon, those type of companies have the largest market cap. And so they are going to have the highest weighting in many funds. And so you're not truly going to get, sector diversification. They're going to be heavily into tech, but tech is what's leading. And so I'm okay with that. When or if a different sector is thriving, if you're in a fund like that, it's going to adjust for you. So I look at it like, it depends on what you're thinking of as far as diversification. I'm not stressed about diversification. By being into the S&P 500 in a fund that is weighted in that way, I know that I'm getting the heaviest exposure to those top performing companies. And if they happen to be tech, I'm okay with that because I prefer not to be in a fund that's, forcing, I'm not for diversification just to say I'm diversified. I don't need to be heavily into healthcare or energy or different things that are lagging as compared to semiconductors. So I'm okay with being invested into what is currently thriving. I hope that answers your question, Key, if that makes any sense. But you are getting exposure to all of the sectors by investing into the S&P 500. But if you look, percentage-wise, you are going to be more heavily weighted into, those sectors that are really thriving in that way. Let's see. So here's a look at VOO. So tech, 33%. VOO. She used FXAIX as her example, but VOO also tracks the S&P 500. So you see, you're getting significant amount into tech, but you're also getting, financials, healthcare. But obviously, we can see clearly that technology is the biggest. All right. So for my annual financial review, I look at 4 numbers. How much money did I bring in last year? What is my net worth? What is my dream lifestyle? What do I do to bring in additional income? Okay, those are great points to take a look at and evaluate for yourself. Thank you for sharing that. And we are going to get on to a couple of the points that you're touching on here. Definitely the one about how much money did I bring in? Okay. Let's see. So guys, like I said, please, if you have a question and I missed it, please drop it again. But let me go down. All right, so now let's get on to point number 5, which is, let's see, do you know your asset allocation? And this is kind of what I was already going on based on Key's question a minute ago. As far as, I was talking about the different sectors, but when it comes to your investments, you know how much stocks, individual stocks, funds, cash, bonds. Bonds is not my favorite thing at all. I feel like the performance is not anything for anyone in the growth stage of building their portfolio. That I feel like is when you are the performance of some of the bond funds that I've seen, not even for when you're kind of in retirement and out of the game, because the percentages that I shared as far as the cash management account and just regular savings sometimes are beating some of these bond investments. But do you know what your allocation is so that you are truly on track to build wealth and have the goals, be on track to achieve the goals that you have for yourself? And you have to have standards, and you have to have an understanding of what is the performance of the S&P 500, and if that's going to be your bar as a minimum for all of your investments. And then do you want to incorporate things that have a higher growth potential, like a VUG, or I happen to invest into FSPGX because I have my retirement accounts over at Fidelity. Some other examples are like SPYG, something for additional growth, as well as SPMO, something I've already mentioned today, which is a momentum ETF. So if you are someone that wants to strive for additional growth and you're comfortable with that, those might be things to incorporate, especially if you are, not knocking on retirement into, approaching your 60s or well into your 60s. And so I think that a lot of people are in underperforming funds that have a mix that is not truly in line with their age and the opportunity that they have to be building wealth while they are younger. And so that target date fund that we often are defaulted into when we start a job. One thing that I've done, and like I said earlier on, never a suggestion for you to do what I'm doing. I'm just here sharing my personal journey. And I still do have some money in a target date fund, but I've chosen a target date fund that does not correspond to, say, my retirement age of when my age would be 65 years old. I chose a fund that's, say, 20 years out from that, so that I can have a more aggressive mix, so that it's not heavily into bonds and shifting to something more conservative, because that's something I want to do when I am really close to retirement. I want to be able to maximize the growth potential in my portfolio. So if I just like to mention that because if you are at a company where you get in touch with them and you know all of your investment, uh, all of the investment choices that are available to you while you are within that company's 401k plan, which I encourage you to take advantage of and get your company match before you move on to perhaps doing a Roth IRA or something additional. But do what you can to get that match. Take advantage of having that simplicity of it coming out of your paycheck and stuff like that. But make sure that you are maximizing in the funds that is best suited to your needs. And the target date fund that corresponds to your age may not be it. In my experience, I have not ever seen that it is. And you might be able to just be invested directly into the S&P 500 or a growth fund like the ones that I mentioned at Fidelity. And just because I use Fidelity is where I have all of my retirement accounts and my daughter's accounts. So it's familiar to me, but you just have to take the time. If you're at Charles Schwab or you're at TD Price or wherever, there should be something similar. You just have to take the time to dig into what is the best available funds and investment choices at your particular brokerage company. So, okay, let's take a look at the chats. Yes, I need to turn off this birthday notice. I have to remember to update my Nightbot. Okay, so now I'm going to go on to point number 5. Do you know your contribution rate? And yeah, just touched on that. Like I said, usually when I make my plans of what to talk about, things start to overlap like this, or I'll touch on it before I even get there. But are you in tune with all the investment choices that you are able to invest in through your employer? And are you maximizing your match? Do they have any opportunities? For example, at my last company, they had a way that you could, before the bonuses came out, allocate a portion of that to go to your investments and not, directly to you. Just taking a look and being in tune with these different options in order to build up your investment account, plan for retirement, especially if you did get started later in life, you feel like you're behind. Just have your eyes open to every opportunity so that you can get on track. All right, so now number 7 on the list is, do you know your debt numbers? Your interest rates, minimum payments, payoff timeline, which debt is costing you the most? And so let's see. What number did I just say that was? Number 7. So credit cards, student loan, medical bills, car loans, personal loans. How are you going about paying these things off? Now, I'll tell you, when I had debt, I would have to, and it's painful to do it, but what I would do is sit down and list all of the amount balances as well as the interest rate, and then put it in order by the highest interest rate. I am a avalanche method person when it comes about tackling debt. So the highest interest rate first, as opposed to the snowball method. But you have to do what's right for you. The snowball method, meaning you start with the smallest balance, pay that off completely, and then shift that payment amount over to the next. So which method sounds like the way that you would go about it? Are you on board with what I'm saying about the avalanche method? Because I want to just make sure that I'm addressing the highest interest, because I feel like that's where my money is being lost, eaten away, and that's where the battle is with that high interest. So thank you, Miss Murph, for tuning in. I was working and listening to you earlier, but I wasn't able to chat much. but you seem like you had a great, long, detailed, fun show going on over there. Okay. All right. So, debt. So, that's something that I definitely want everyone to have a handle of and face. And like I said, it's hard when you have to sit down and write down those numbers, but until you list them all out, that's another thing. People are often, when I was just watching a new show, it's on the OWN channel, Oprah's channel, which I don't have on TV, but I was able to find it through my HBO app as well as here on YouTube also for free. Um, and this show, uh, there's a portion, I think there's only about 2 or 3 episodes of the show out so far, but during the show, she asks the people, "How much debt do you currently have?" And they tell her the number, and then she tells them how much they're actually in debt, and it's usually 50% more than what they think. Like they say, "Oh yeah, I think I'm about 40,000," and then she'll tell them they're 75,000 in debt. And so that really shows them, and I think many would have the same situation, that you think you know the numbers, but if you don't sit down and really comb through and get the details of all of them, the interest rates on all of them, you could be really fooling yourself and just not in tune with what's going on, which is the whole theme of today's live, is clarity on all of your numbers, all of your finances. And so the last point, point number 8, is, do you know your monthly cash flow? And someone earlier in the comments, I think Christina, was mentioning about this. What's coming in, what's going out, what's left to invest, save, and pay down your debt. This is something that we also need to be in tune with. And I know some people are not big on budgeting and don't want to take the time to write down every time they go to the supermarket and the gas station and order takeout. But by doing that, even if you don't do it constantly, every single month, take a time period, do it every other month. Even if you don't keep it up, I think you can bring clarity to setting budgets and figuring out where those money leaks are and seeing where you need to pull back. But you have to take the time and put in some work in order to at least do it a little bit, a little bit. Now, I don't want to say it would be great if you could commit to doing it every single month and knowing where every single dollar goes. But even if you do it every third month or so, going through a time period, hopefully you're not, you have ways to easily track this through your credit card, debit card. If you are a cash person, which I don't think many of us are nowadays, but finding a way to track it and then saying to yourself, okay, something here has got to give. I see things in here that need to change in order to achieve the goals that are truly important to me. The things that are lacking are being eaten away by things that can be dialed back. Perhaps it's eating out. Perhaps there's some subscriptions in there that are really not giving you value anymore, whatever it may be. But it's about gaining that clarity and having your eyes open to it. So those are my 8 points that I wanted to touch on today. Let me know your thoughts, and I'm going to take a break and go through the chat. And guys, let me know if you have any questions, comments. Let me go back to my. So after now, I don't know when everybody tuned in, but drop a money bag if you knew most or all of your numbers, and I don't know, or a different emoji, kind of a question mark emoji, kind of to say if you're still unsure and I highlighted something that you need to take a look at in order to really have true clarity when it comes to your finances. And so I just wanted to just continue to be on track with sharing the message that I want my channel to really be able to highlight of having emergency funds, realizing that investing is for all of us. If it's not built in that you work for an employer that has a 401k or 403b, we have to do it for ourselves. We can go contact a brokerage company, for example, Fidelity, open a Roth IRA, set up contributions there, choose a basic investment like FXAIX, which is the S&P 500. This is not complicated. We need to set up funding goals, be intentional about what we're investing. And like I said, I think let me put up the investment calculator for a second. I keep on, I wanted to continue to highlight this. I'm okay with you if you want to save for a home, car. I want us to have investments, savings with an intended purpose. I don't want our retirement accounts to be taking on a job it was never intended for. Not to fix the furnace, not to do anything like that. It's to take care of our older selves. And so I want to just do a quick example of, say you run into an issue, you need $15,000. Okay, let me share my screen for a second. So you run into an issue, $15,000. You take that $15,000 out today. I don't want you to think about, I don't want 15 years from now, I don't want you to tell me, oh yeah, whenever such and such happened back in 2026, I took $15,000 out. I want you to think about it like this. That $15,000, if it had stayed invested like it was supposed to, for that 15 years at even a modest 10% rate of return, that $15,000 would have turned into over $62,000. So I want you to look at it like this, because when you're taking that money out, you're not cheating yourself by $15,000. Think, I'm cheating myself out of $62,000+. And go about it that way. Figure out how you can handle emergencies and situations without cheating your future self by taking money out of your retirement account on top of the growth that $15,000 was going to gain over those years. Most likely you're going to be hit with a penalty if you're not setting this up as a loan and a plan to repay it. And so I just wanted to share that as an example, because I'm always saying this, and I want us to be ready to take care of our older selves and truly be on track to build wealth. And I want you to invest what can truly stay invested. I don't want you to get yourself in a situation where you're investing too heavily and then you're really in a situation where you can't do anything other than tap into that. You have no other source of a way to deal with your situation. But really, I want you to change your money mindset of the potential of what your money can do if you give it a job and keep it invested truly for the long term. And, when I say, and people often, I just want to continue to bring clarity. And I sometimes I may even say the wrong word, because, saving, investing, trading, those are things that I really try to make sure that I'm stressing the difference. And I'm okay with all of them. I'm not a person that's like, oh no, you shouldn't trade, you shouldn't options trade, you shouldn't do certain things. If you have the skill and the knowledge and the desire to do those things and you're ready to put in the work, I feel like that is your prerogative. But I think you should do a balance of, if you're going to be a trader, be a trader and an investor. Take some of your wins if you are successful in your trades and be putting that to investing so that you are building up that investment account to bring simplicity to your life when you are older so that you can draw upon it, take care of yourself, add that to potential pensions or Social Security, whatever you may have coming in at that time, but just making a situation where you are ready and ready to take care of yourself, comfortable and prepared. And so I did not see when Vincent came in and gave this super chat. Thank you. I appreciate all of your support of being a channel member and always supporting the channel in this way also. And like I said earlier, I hope everyone is home, safe, warm, and ready for this storm. All right, full support. Hey there. Did you grow up with parents? KG's in the house. Did you grow up with parents who had a lot of money? Thank you for the question and thank you for tuning in, Keenan. And guys, tonight, if you're not, I don't know if it's filled up yet, but tonight at 8 p.m. Eastern Standard Time, Keenan is having a free event that you can tune into. So check that out if you haven't signed up already. But to answer Keenan's question, no, I did not grow up with parents that had a lot of money. I was my parents were teenage parents. I am the first generation born in the U.S. So my parents came here with my grandparents, immigrant grandparents, both sides from Jamaica. They met here in the U.S. and they wound up going to school together. So yes, teenage parents that had a lot of struggles and yes, there was no money mindset going on. There was no knowledge passed on in the household. And my father, I'll tell you, I don't know if I've ever shared the numbers specifically on the channel, but yeah, my dad was probably 15 when I was born. My mom was a little bit older, but when I say teenage parents, I mean young. And so, yeah, he finished high school and went into the military. And yeah, there was not much of anything going on. I primarily lived with my grandmother or was supported by my grandmother and my mother growing up. But yes, there was just a household of just trying to keep a roof over our head and keeping the bills paid. There was never any discussion about saving and investing. And so one thing that I kind of stumbled into that people often ask me is, how did I get started investing? And I graduated high school when I was 17 years old and pretty much immediately started college. I did immediately start college, but then I dropped out. And before I was 20 years old, still as a teenager, I was working full time. And so I started contributing to my 401k. Even though at the time I had a low income, I was contributing something. And so I got started investing earlier than most because, like I said, I was about 19 when I got it started. If you and I can make it, anyone can. Yes, it really, and guys, let me tell you something. Being a part of Keenan's Discord and just being a part of following along with the things that he has shared in his financial journey has really turned things around for me. Just like the way that I'm talking about debt and just everything, having a handle on your investments and knowing what your performance is. And these are all things that I've learned and taken the time and effort to get a full understanding of, because of being in an atmosphere with people that made these changes and figured these things out. It really changed and instilled me and has turned my financial life around. So thank you, Sledge. Thank you, Sledge. So guys, yeah, I don't know what more I can share, but I guess I can go deeper. Maybe today's the day. I'm going to go even deeper about my family situation. So yes, my family, both sides of my family, for some reason, yeah, come to America. They believed on Catholic or private school. So my mother, I never went to public school. That was a priority for my mother to figure out by any means. That was something that she felt was a necessity. But yeah, she had to do all of that. We never were able to kind of live in an apartment by ourselves, because yeah, it was a bit much, the bills and having a vehicle and car insurance and all of that. So we pretty much always lived with my grandmother. And then once my mother got married, we had 3 incomes between my mom, my grandmother, and then her husband. So, but yeah, it was not easy. I wound up actually working at the same company that my mother worked at. When I was a teenager, I would do a summer job there. And then, yeah, I just didn't see, I was also a teenage mom. Did I say that already? But yeah, I followed in my parents' footsteps. So at 17, when I graduated high school, I was already a mom. So I had responsibilities, going to college, not having a car. I did not prioritize the things that I should have. But in time, thankfully, before any more time passed, I've gotten a handle of so much. And the account that I share here often, that I have that, what is it now, about 750 shares of FXAIX in. That account was built from my 401k from my first job. And so I think the value, there's a few other things in that portfolio also. I have some NVDA and I think some Taiwan semi in that particular account, along with the S&P 500. But I'm sharing that detail because this didn't just, I didn't just fall into this, I've been working ever since I started. Since then, I've always been working full time. The only, really breaks that I didn't really have a break from working full time, as well as sometimes having some part-time jobs. I worked at Bath and Body Works, and even right now I have a part-time job where I contribute to a family business, but I do that about 3 hours a day, as well as I have my own business with real estate. So I've always been working, and thankfully that first job, which I was at for a substantial amount of time, got me on track to build that amount of money, which it's only been about 2.5 years that I got it from Empowerment, brung it over to Fidelity, transitioned it seamlessly. Don't want to cause any tax implications, but you can definitely get a handle of your old 401ks by opening a Roth IRA or a traditional IRA, whatever suits your needs, at a different brokerage company, and then having it transferred directly from that company to the new account that you created. But some people sometimes make comments like, "Oh, it must be nice, and it must be you're lucky to have been able to do this." But really, I kind of stumbled into some of it. I did put in a lot of work over the last few years, but some of the biggest things that have really helped me is by contributing and by not taking any money out. I've definitely been through it over the years. I've had to do everything around this house that I'm sitting in right now. I definitely bought a fixer-upper. My realtor would say to me, uh, when I was looking for my first primary home for myself to live in, not a rental, my realtor back then, she would say, "Oh, here we go on Lisa's quest for the worst house on the best street." And so that's what I wanted. I wanted to go and be somewhere where my daughter could play outside and I had a yard and I can have a garden, but I knew what my budget was. And so when I bought this home in time, I had to do everything: windows, roof, furnace, um, just a new kitchen, a new bathroom, everything. But what I didn't do is look at my 401k in order to do my renovations, in order to get my next car payment or something like that. That is one thing that really has helped me. But anyways, I hope I've answered the question. I'm trying to be transparent. I want you guys to get to know me, so feel free to ask any questions that hopefully I can tie to something finance and related to the points that I shared today. I definitely had I think I've painted the picture so far of, where I came from, and I didn't have the money mindset that I have today. I wanted Anthony from About That Wallet. He asked me a question in an interview with him, and he said, "What was my biggest money mistake?" I recently shared a little short clip about this, and he said, "I'm the first person to ever answer this way." And my answer to that question, it was that I did not prioritize finishing my education, getting, my career started by dropping out of college and getting an apartment, getting a car. Then, we had a used car, but then I got another car, which had a car payment. And, it just was not, and still working full time, but not making much money because I was in a role that was just a role that did not require a college degree, and was not making anything substantial. And so it wasn't until I was nearly 30 years old that I then graduated college, and still, because I had been working all those years, working sometimes my full-time job as well as my part-time job, like I said, at Bath and Body Works or at the clothing store or whatever I could pick up for something extra. It just caused me to be in a situation that even when I did graduate, I was in a situation of so much struggle to find a job because I wasn't the typical, I wasn't 21, 22 years old with internships and all these, opportunities to have built up my skill set. I had a degree and that's that. But thankfully, I was given an opportunity within the company that I was working for. And I was there again, I would say another few years, maybe another 6 years or so after I graduated, which gave me a step towards really building my career. Before I got laid off. That's how all of my jobs have ended, was due to layoff. But let me take a look at the chat and see if any. Okay. What are your rates for homes in your area? I haven't looked lately, but I think last I was looking in the news, it was like about 4.6%. And I'll tell you, when I bought a home back in 2022, about 20 years ago, when I bought a home, my interest rate was 4.9. And so that's why I can remember recently seeing something that was a little slightly lower than it was then. And so nothing great. Thankfully, I gotten everything refinanced, or I was able to purchase homes recently, in recent years, and I'm at about 3% on all of those. But it has come down drastically. I would love to buy another rental property. Okay, okay, okay. But guys, let me know if you have any Let me know if you have any other questions or comments on the points that I shared or anything about my background that I've touched on so far. But yeah, I always like jokingly say, yeah, I didn't grow up in any house with the white picket fence outside. My mom did not purchase her first home until I was out of the house already, or just about to be out of the house, because I've been on my own since I was also a teenager, around 19, when I started working full time. Because yeah, I was prioritizing not I wasn't prioritizing finishing college and getting a degree and being on track with creating a career for myself. I did put some things ahead of that, uh, having an apartment, a car, living with my boyfriend and my daughter, and yeah, it put me at a setback, but it was something that I can't go back and do. I was always going to have the responsibility of taking care of my daughter, but some of the other bills and things that I chose to do, could have I if I could have stayed with family and saved and gotten more on track with trying to at least get my associate's degree, maybe focus on getting going to school full time even till I was 20, and then but no, I created that situation: full time work and part time going to school. And it was hard. It's hard. It's hard to work full time and find classes that fit into your schedule that are evenings and weekends. And so that was a battle that I was in for nearly a decade. But I got it done. Thank you, Mr. Right Way, for subscribing. You really have been inspiring me with your consistency with going live. Totally different genre, but I draw inspiration from so many of my content creator friends in different ways. My hard work is paying off. Thank you, Miss Murph. Um, but yes, I thank you, Melvin, for tuning in and chatting. I don't know anything about stocks. I want you to learn about stocks. Do you have a 401k, a 403b? What type of work do you do? Yes, I have looked at high school tuition is for Catholic schools and private schools. It's crazy. It's crazy. But like I said, that was my family's choice. It was not my choice. When I got to college, just thinking about all the money that was spent for grammar school and high school, I asked my family, like, why didn't you just save all this money for when it came to college? Because college is not free. The other things could have been free, but it was a priority. All right, so I'm going to take a station break. If you haven't already, make sure to like this live stream. If you're not subscribed and you enjoy the content that I've been sharing today, subscribe, hit that notification bell so you can keep up with all of my videos and live streams. And when you watch a video, watch in full, leave me a comment. Let me know what you enjoyed. Leave me a question, a comment, an emoji, something to let me know that you were there. Okay. All right, so I'm not seeing any other questions. It's a struggle. What's the struggle? uh, we got to take care of our older selves. Don't forget. What do you know how much your Social Security is going to be? Do you have a pension coming from a previous job that you had? listen, we know it's expensive out here. We know how this world has been changing, and we have no idea what these different administrations that are going to be coming into place are going to be doing for us in the future. So, okay, so guys, I posted the earnings calendar for the upcoming week. This week and next week, we have most of the Mag 7. NVIDIA is the only oddball that's like 2-3 weeks out from everyone else. We have a significant amount of earnings going on the 28th, and I think one on Friday. So what do we have on, let's see. On January 28th, we have Microsoft, we have Tesla, we have Meta. On the 29th, we have Apple. And next week, or coming up soon, we have Google on February 4th and Amazon on February 5th. And then, yes, that oddball is not tied in with all the rest of the Mag 7 is NVIDIA, which is not until February 25th. And so I happen to have an investment into all of the Mag 7 individually, but you can definitely get that exposure from investing into our ETFs. Many of them are going to be highly weighted into those companies. And so we have to be ready. We have to just be, always investing. I want us to always be investing, always building our portfolios. Don't feel like it's too late for me. Don't feel like, things are already at all-time highs. What do I do? You get started, because I don't know off the top of my head, I would need to look up the statistics, but say for example, the S&P hit all-time highs over 30 times in 2025. And so what's going to happen over 2026 and 2027? How many all-time highs are we going to have again? Don't feel like it's too late. For certain individual stocks, it might be, but that's why we build our foundation into our ETFs. We use that for stability, simplicity, as a way that anyone can get started with investing. It can be your start and your finish. But from there, you can then incorporate more aggressive funds that can give you a higher growth potential in your portfolio at a smaller percentage. And then from there, we build on to individual stocks if you want to take on that responsibility of incorporating true quality investments into your portfolio. And this is where you have to do some work to make sure that what you're incorporating is truly an investment, not a trade, something that you can hold for the long term, that is going to continue to grow, that has a future, like many of the companies that I've mentioned today, whether just through conversation or through those companies that have earnings coming up. So let's see. So yes, I shared the earnings calendar as usual. If you haven't already, there is potentially still time for you to sign up for Keen and Grace having a free event tonight at 8 p.m. Eastern time. So I don't think I had it on my channel, on my community page, but it might have disappeared. So you can definitely find it on his. Let me take a look at Vincent's comment. A friend of mine attended her local community college while in high school in order to build up college credits that would then transfer to a university. One way to save money. Definitely is one way to save money. And it's something that I got started at a local university that was very expensive. But after that first year and then dropping out, and then I came back, I was working full time, and then I got started back with going to college, and I took 3 classes, and I didn't do very well with those 3 classes. I think statistics might have been one of them, a class that still to this day when I hear it scares me. But after that, there is a local community college, and I did the same thing. I took some classes. I made sure to go to the community college and, uh, get the detail of the classes that I wanted to take, go over to my university where I was going to want to make sure that they accepted the transfer and make sure that, it was going to go because I knew that I was going to, I just wanted to take, I'll be honest, I just wanted to take my electives. I went over to the community college because I had already done a full year, a little over a year at the university. I wanted to go over to the community college. I took music, I took government, I took those basic classes that I didn't feel that I need to pay all this money, university tuition for. But between the classes I took at the community college, got transferred, I was working, and then I was able to get some tuition benefits from my employer. And then in time, my husband wound up working at the university that I was going to. And so as a spouse, I got tuition benefits from that. So all of that together allowed me to finally finish college and not be in any student loan debt. So I got it done. Hello, Cynthia. Thanks for tuning in. Let me know if you have any questions or comments. But yeah, that is something that we definitely have to be open to doing, living at home, not wanting to upgrade your lifestyle and have a car, expensive rent, all these different things that are just going to hinder us from what we may want to achieve. And I know it's harder than ever right now. They say that, a single person to live in certain big cities, they need over $100,000 income to live comfortably alone. And it seems crazy, but I definitely think it's realistic because I ran into someone recently, a couple months ago. I might have shared this story, or I hope I didn't share it too recently that everyone's heard it already. But I ran into someone. I was dropping my daughter and her friend off at the mall. I wound up talking to a complete stranger. She was asking where a particular store was, and I told her where the store was. But anyway, she sat down and started talking to me. And we both bought our homes in this area, say 20 years ago. And there's some condos that they were building. And she was saying that her son had taken a look at them. And she was like, how could we ever have managed to live? And so we were just talking to each other and saying that we're so grateful to be in a home and have a mortgage that's significantly less than what these people are paying for an apartment, where they don't have they have to pay extra for a parking space. They may not even have in-unit washer and dryer, and we're living in a 4-bedroom house with a driveway, a 2-car garage, space, and things are just so expensive right now. So my mortgage is less than rent in the city. Facts. Yes. I know. I've gone to people's apartments, and a walk-up apartment, no washer, no dryer, and no elevator, and yes, their rent is more than what my mortgage has been since all of the years. My mortgage has gone up. It did go up over the years with changes to insurance and as well as taxes and things like that, but it never exceeded some of these rents. And yeah, sometimes I hear some other content creators saying, why is a single person paying $2,500 for rent? Because that's how much rent is in their area. They're not just doing it just because. What's my picks for the week? Well, I was talking about the earnings calendar earlier, Nora, and yeah, it's an exciting week. But I'm not one to always I very rarely trade individual companies. So we will see. Oh, I didn't touch on this. I think I also had I'm just kind of thinking about what potentially could happen tomorrow with Trump talking about this 100% tariff on China. I'm usually more in investor mode than trading mode. Nora loves her, to be have her eyes for some contracts for some options trading, but um, I'm going to be starting a new investing challenge, and there are many positions that I'm still in the building stage on, and so I do try to stick to my dollar cost averaging, um, a daily or weekly set amount into my investments, but I also buy the dip, as I say, and go heavier when I see opportunity in the market, like potentially will happen when Trump starts going back and forth with China or Canada with this tariff-driven news. So if you're just getting started, it might be hard for you to go through it, but all of my I actually did a video recently about sharing 5 of my individual stocks and their current performance. And I also threw in there my VTI and VOO to share, how they compared. And my VTI and VOO, the performance is lower than my individual stocks. But you have to be ready for that volatility. Like I said, the responsibility of doing the research, and if the fundamentals of the company do change or something, drastically shifts, you have to be ready for that pullback. But the point is that you have to be willing to be ready for a recovery, and sometimes it takes time. Someone made a comment to me like, Lisa, I've been investing. Why are you 100% up on this investment and 75% up on this one, and 150 up on your Google or whatever? What am I doing? Why aren't I seeing those type of gains in my portfolio? They shared a couple of their investments that were not investment status, in my opinion. They were definitely trade status. They are not things that I can see that this person is not putting the research into knowing what a quality investment is. And then there were some good things in there, I think, like Apple, NVDA, but maybe they're just not being consistent. Maybe they're not, taking the effort to just keep on building. Like this year, what happened when, Trump really first came out with this whole tariff-driven news and the economy took a deep, pullback. If you had just started investing, you were going to see that. You were really going to feel that in your portfolio. But because I was at that point, maybe say 4 or 5 years into building up my positions into my individual stocks, yes, I could, there were times that I saw, 5-10% drops on things that don't move like that usually. But the point is that I kept on investing. I'm giving it time. You have to realize for yourself, what is your time frame on investing? For me, when I was 19 and I started contributing to my retirement account, what was my end game there? 65 years old. Are you thinking about your investments like that? At least a portion, your retirement investment. If you can, do better than that, and you think, oh, I want to retire at 50 years old or 45 years old, then you need to be investing with intention in order to achieve that. And so take that into account when you are making your plans, and make a plan is what I really want to drive home to you, that it's not just going to happen. You have to be planning. You have to be using the investment calculator, setting goals for yourself, because your portfolios are, it's just not, you can't turn a blind eye to your finances and then just think you're just going to be thriving easily. You have to put the work in. So let's see. All right. Shout out to KGU. Yes, I will be going live again tonight at 6:15 Eastern Standard Time, and that will be exclusive for the Discord. And we will be wrapping that up in time so that people can go and tune into Keenan at 8 p.m. Eastern Standard Time. And I will be live with Trudy. So thank you guys for the birthday blessings. I forgot to take that down. My birthday was a couple of weeks ago, but I forgot to update my Nightbot. Happy birthday to any Capricorns that happen to be in the chat. Capricorn season just ended, I think, like 4 days ago. Oh, Barry, I'm so sorry. I missed when you dropped that super chat. Thank you for that support. I hope you are still here. I'll have to send you a note because I totally did not see that. Maybe I was sharing screen and looking at something else at that time. Hey, Buddha. Ashley. So I will see. I hope you, AGU, who's in the chat. I didn't really push this one because I want you guys to tune in tonight. But as always, I try to add chapters to my live streams and my videos to help you to navigate more easily. But like I said, make sure to like, subscribe, hit that notification bell. Leave me questions, leave me comments on everything that you check out as far as my shorts, my videos, my lives. I appreciate the support and the engagement for the channel. That is a way that we can always support each other. All right, let me go back to the chats. Okay. And thank you, Nora, for being a channel member. Thank you, Buddha, for that super chat. Great videos and everything knowledgeable. Keep grinding. Keep us informed. I love your videos. Thank you. God bless. Thank you, Buddha. And let me know how I can help you to stay consistent and make some choices in your portfolio if I can. But I'm going to drop this one time for today for those super chatters.
Thank you so much. We do greatly appreciate it.
And I hope to see you back next Sunday, 3 p.m. Eastern Standard Time. Check out my videos throughout the week. And thank you for tuning in today.